Okay, hi everybody. Sound all good? Support is in the room with me, as you can see, as well. You know, my parents were gonna name me Lily, but they couldn't, so I'm Jasmine. But I always see Lily type in, so that's why it reminds me. But anyway, let us get started. All right, so as you can see, what we have today on our current market focus is does look like to me like a light news week. Volatility has dropped with some of the overall virus fears subsided somewhat. So we do have lower volatility. More countries are in talks of opening back up. The only thing I'm a little bit concerned about is what the damage has done. So in terms of where it's going to take the economy, and that even though it's more or less in a way priced in, but it does look like there is some uncertainty there. So that's the main thing I think I'm looking out for, to see if we start to get volatility back again, because it's worse than they think. You know, we're still in the midst of earnings season, so you know, those things also matter. But like I said, a lot of the numbers, you know, the other day somebody had asked if, you know, you look at the reports, and of course you got to look at the GDP and unemployment claims, all that. The only thing that I see when we were having more or less the overall death tolls for each day was that it was kind of already known that it was going to be really bad numbers. So that's why it's a little bit less attention at that time, just because it's something that's already known. But like I said, right now, with more numbers coming out, if it's more detrimental than thought of, then that could also hurt the market. So that's something. Now you can see also for the small business loans, since they ran out of money, they're going to add, they are close to another deal for another 500 mil. But like I said, it looks a little minute to me comparing to the 350 bill that they ran through so quickly. So I don't know what that's really, you know, it's going to help some, but I think it's still more than likely way off on the number on that. So that also remains to be seen as far as I'm concerned. All right. So with that being said, I thought today we just start to take a look at, let me bring up TradeStation. Oh, I did see a comment. Charting is very important to me. It's always been it should be to everyone, but you know, these days with a lot of different packages, you know, a lot of web-based platforms offer their own charting. Some are decent, and others are not. But it is very important to have good charting just in general, because, you know, what are you trading off of? You're trading off of levels, you're trading off of technical, so it is important. When I started, it was eSignal, which was actually not bad. It was also one of those paid ones, but it was not bad. I eventually went over to TradeStation because I do have a multi-monitor setup, so it's like 8 monitors, but I like the different workspaces that TradeStation offers you within each monitor. So with eSig, I did notice I had to, I could use the eight different monitors, but I didn't have the option. I don't know if it's changed since then, because I didn't go back since then, but I didn't have the option to change the workspaces. So that was the one thing I switched over to, and so I've stuck with TradeStation ever since. So it is important to it is important, right, to get that um, uh, to be good in the charting. All right, so I thought we'd take a look at the VIX, mainly because I want to see if the volatility picks up. So you can see on the bottom, when we're in a strong bull market, you can see how the volatility drops off here. And, you could tell every day the market just slowly creeps up, slowly creeps up. Once we start to get some news and, overall the negative news, you can see what starts to happen. We see a big spike in volatility. And you could see that, yeah, that's why I said what David's pointing out. That's why I said that it is important to have good charting. So, do your research. I know when you're new, it's hard because you don't really know what exactly to look for. But yeah, you will see some differences. But if the main ones that are good, it is good to stick with them. So do your research on that. Anyway, but you can see right now. So what I'm looking for now too, you can see that spike in volatility move down. And now you can see what's happened in the last couple of days. All right, so you can see this little box here. So in the last couple of days, we've lost volatility again as we started to calm down a little bit in general. So whether we're going to go sideways here for a bit, but I'm looking to see if it can start moving outside of the range to get the volatility back again if we start. So like I said, no major news this week unless we have something that's unexpected. So if no major news, we should be able to stick in. But if we start to get if we start to test the lows again, or we start to break the lows, I imagine volatility is going to start to pick up again too as well. So that's something to watch out for. But right now, it looks like this is where we're currently at with the VIX. So something to watch out for on the volatility side. On the 240, you can see where we're at on the 240. We're in the middle of this overall range. We have a little demand right down below at 36.17 to 33.34. And we have the upper zone at 50.78 to 52.67. A lot of people, I don't know how many people actually use, ATR or pivot points. Anybody use those? I'm not saying that it's good or bad. I'm just saying that I'm just curious to know. Yeah, this gives you a good, you could see, right, as the market is selling off hard, you're going to have, right, a great volatility coming in. And you can see here the difference, right? You can see difference there, and you can see a difference there, right? You can see the difference in each, right? Yeah. So what is it good for, right? It's good for that what it's good for is it gives you a little bit of an idea of a range, perhaps, but overall it's lagging as well, right? It's lagging. The ATR, the pivot points, what it's lagging is because you never know when that extra volatility starts to come in, then it's going to take you out of that overall range, right? So it is a little bit of a laggard, and so you just got to know how to use it if you are going to use it. Like Petra's just using just supply and demand, so you could see that won't affect her at all, but you just got to realize that that's where once the volatility starts to pick up, you're going to move out of your ATR, you're going to move out of your pivot points just because of that reason. All right, so it's something for us to keep an eye out on as the days go on. So for today, you could see as we started in overnight, we did have a mixture. We had a little bit of weakness inside of Asia and a little bit of strength inside the European markets. So if we go take a look at Asia. Okay. So if we go take a look at Asia, so you could see what has been happening. It's pretty much just like the equity markets, the U.S. equity markets. You can see that we have started to. Okay, so we're still here in terms of. So the market keeps attempting to break out. Oh, we didn't. Let me just take this back into. I need this a dark color, otherwise we can't see it. Right, so you can see the market's attempting to break out, but so far it is still having trouble. So also that is important too, because that means there is still, you could see still some supply left up in here that we are currently still attempting to try to break through, and right now we still cannot. So as you can see with this, we start to fall back a little bit overnight after holding throughout the day. So it looks like to me still a little bit of trouble inside of these overall markets. Now a little bit higher, of course, we're still far away from that, so we'll worry about that if that should come in a little bit later. And then for right now, the lower demand is coming in at 18,433 to 18,190. So that's Asia. Like I said, they showed a little bit of weakness to start the weekend off, the weekday to weekend to weekday. The German market. So this was the area that we had a few, I can't remember when, but last time we looked at it. So if you remember the DAX actually had to shut down for a little bit. Oh yeah, absolutely. Yeah, pivots for targets. Yeah, you can absolutely use that for. Use these things. So what I want to caution is I guess the new person who they're told these things. You're told to use these things. So you can see if you understand supply and demand, you understand how price action works, and if you use these as some of you are saying, as a either a confluence or a target, things like that. It's different because you already understand what the chart looks like. When you're new and you're just completely relying on those or relying on the free indicators, that's where you get into trouble, because that's where the issue comes in, where you don't know what you're looking at, so you're just fully relying on these indicators. And I think I've lost more money on that than anything else, just because when I first came in, I didn't know anything. So I just figured, well, they're telling me that this works, so it's got to work. And that's not the way to go. Really, the best way is, I know it's hard when you remove everything and you just have like a naked chart, but really the best way to see is using the supply and demand, using the naked chart, understanding how price action works, and then going from there, rather than, clouding up your charts and not ever knowing how supply and demand and price action works, and then just getting more confused as time goes on. So that's my advice, just from, and I believe support here too as well went through the same thing. So feel free to always ask questions if you have issues. So you can see this area here that we've had on the DAX. It closed for a little bit, then it opened up, and then once it made a new high into the area, it was a gap with a retested zone. And since that time, we have fallen. So I put this out here for some learning. So you can see, like on this initial fall, on this move, you can see that this is your easy money target, right into this area. You can see that's more of an easy money target. This you can see, you always want to get out before any, because you can see too, you may never get back to a fresh demand if the market is still showing a little bit of strength. Doesn't mean it can't get there. We could still fall there and get there, but it doesn't mean the first time through. So it's always good to, even though it doesn't look like it may be a gray area, but you can see when the market's still moving up, it's still an area that is held and then moved back. And for some of you, if you took the trade, you may be taken out, maybe move it to break even plus some commit. Who does that? Who says, who, this time it didn't move back, so it's fine. You could get some profit, but who, like, say right here, if you got in and then you said, well, like, say for instance, even though let's just say for instance it touched here, you got in and then you said, well, let me, moved a little bit in my favor. Let me, not only move it to break even, but let me move it to break even, but let me cover my commission. And then what happens? Prices come up, knocks you out because you're a commission, and then all of a sudden, here we go, and there goes the fall. All right? Yeah, and it's mainly because when you first start out, what you want to do, or some of you because you're day trading too, right? Day trading, you tend to watch it. You watch it like a hawk, right? You could just see it here, like if this had hit, you come in and you're feeling good, everything is wonderful, wonderful. Then all of a sudden it keeps coming back, and then it's coming back to your entry. Then you start getting like really nervous. Especially this market, because it's a pretty big, it can be a pretty big price point when the volatility hits. And then you can see it starts to, and then you're like, oh man, I don't know, I'm at break even. Oh, maybe I should, I don't know if I should like try to get out, or I should move it. I want to cover commission though. I don't want to lose any sort of money all of a sudden. And then there it goes. So, you always, I do think when you're looking for turning points, that is going to be very rough, right? If you're doing just pure day trading and looking for small moves, that's fine. But if you are really looking for turning points, that is going to be a problem, because you're probably going to get knocked out a lot more than you. I like to use some sports analogies, and if you really take a look at it, so you look at people doing, like, say for instance, in baseball, if you're a home run hitter or a base hit hitter, it's very hard to be both, right? Usually one person's going to excel in one or the other. They're going to be great at one and great at the other. Very hard to be both, because you're using all your energy to do one, but then, it's, so if you try to picture it with your charts, it's like this, if you're trying to be that long term, which is great, right? If you're trying to be that weekly, daily person, that's great. You're going to get the big runs, right? And you can see some of these trends are huge. So you're going to get, that's going to be sometimes all you need for the whole year. And then others of you're trying to, because you don't want to risk too much, or you just like being in front of the charts and all. So you're sitting there trying to do little time frame. That was another question too. Is a 5-minute can be as good as well? I mean, it can, but of course, with big news events, it's going to get run over a lot quicker too, right? You could just see all that. But it's very hard to switch your mind. If you're thinking, and all of a sudden it's kind of, it's like, okay, like I'll give you an example, like myself, right? When I first started, I was an extremely short-term trader. And then when I started doing very, very well in it, I thought, wow, if I'm getting this amount with 8 to 12 ticks, and I see the market moving like 250 ticks a night, why should I stop at 8 to 12, right? I'm thinking, boy, I'm just like multiplying the money in my head, right? I'm just like, it's like, wow, all I need is a day, why do I need anything else? So, but then what happens is, because your mind is not set to it, now all of a sudden you got two things going on for you. You're thinking, oh, should I take this little profit or should I go for the big one? No, wait a second. Now it just knocked me out. That would have been regularly a win for me, but now I just got knocked out because it moved back. Oh, now, okay, so I can't go for the big one. Then the next one, that's when the big one comes, right? You took the small profit, now the big one comes. Before, you didn't take the small profit and you took a loss. So now all of a sudden it messed up your whole trading because of your indecision of what you wanted to do. So in my opinion is what I suggest you do is get really good at one way or the other, whatever you want to do. If you can't be in front of the charts, get good at the long-term trading. If you like being in front of the charts, get good at the short-term trading. Don't try to mix them both into one. Eventually, if you want to, you can do separate accounts and keep it completely separate. So keep your long-term completely separate, keep your short-term into a different account. And that's what I would suggest. But in the beginning, try to really try to stick with one, because I get some questions on that, so I figure I'd just go over it a little bit with it. All right, so let's take a look now on the 240. Yeah, is it really though? I mean, yeah, I understand, like, it feels that way. So on the 240, you can see we do have a gap up above, so, and a gap down below. So right now the market's right in between. Can it move in either direction? Yeah, absolutely. So it is open air on both sides right now. And you can see we have another gap open at 11,398 to 11,640. Okay. Yeah, I mean, you could say that it is, but then at the same time, if you really think about, okay, so say for instance the people that let's go to, before I do the S&P, I do want to say thanks everyone for emailing in. You are on the priority list. So I do want to make sure that anybody else that wants to, you just email me at my Gmail and, follow social media for the new venture that's coming. So, but you're definitely on it. I do see some of the other comments that come in as well. So thank you all for that too. And yeah, keep it coming. It's been great. But let's go to the S&P. And what I wanted to show you with the S&P. All right, let's see here. We've fallen quite a bit since then. So what I was looking at was, so we are still struggling up at the top here, as you can see. Does look like it has a 5-minute within this overall area. So you can see that's coming in at 28.66, 28.69. All right, and that's it's actually a really big overnight range here. This area looks a little bit interesting too. You can see right where they broke up above the daily 50. Now it's come back down. And this is an overnight. I would keep that an eye on that too. Oh, right. And, there. Okay. All right. Yeah, we'll put it back up at the end, or you can watch one of the recordings. Is fine too. If you yeah, you'll get plenty of chances, or you could go back in the recording as well. Don't worry, we'll definitely get that out to you. But you can see that area. So the question is, when you do long-term trading, a larger runs, even though 15-minute, what time frame do you really focus on? Well, I mean, larger time frame should be, the minimal is 60 and above, the minimal, I would say. For those of you that's looking at targets, so remember with overall the supply and demand. So you have to know it well in order to know what your opposing supply and demand is for your targets. But remember too, with your targets is, if you're constantly not hitting your target, more than likely you need to use a opposing level on a smaller, one lower time frame. If you're always hitting your target, so that means you're pretty good at it, but you see it run more, then you should, move up one time frame in your opposing target. So. All right. So anyway, this is the area that we're looking at on the S&P. Let's go take a look at where okay, let me go to, okay, let me go to this page. Okay, so you can see in terms of the bigger move, we do have right, we still have that area up above on the 30.02. So don't forget that area too as well if prices should move up. Right now it looks like our range inside, I mean Friday was pretty much looked like to me an inside day overall, but today it looks like our range in the overnight is starting to get quite large as it is already. So going back to the SPY though, okay, so this SPY area, let me just see where, I'm going to go into the 15-minute right now. So that's, okay, so if you take a look at this gap right here, so if you take a look at the SPY, so you could, if you see this SPY, so look at the SPY right now, right? So the SPY, we have this upper area. This is going to come in line with that 60-minute ES zones, like the couple zones on top of each other. That's on in the SPY there. On the lower end, you can see that this area here on the 279.20 to 277.20. So this gap in where the SPY is at right now, it's going to be now this gap has become a lot smaller. The fresher area is really coming down lower into this. It's more of a 30-minute zone at the 260 to 27. But this area, I'll show you what it looks like on the S&P. On the S&P is going to be this area right in here. So this whole area here is going to be that overall gap. So right there is, so right here, that's going to be pretty much your gap. So in terms of quality, you can see, right, that gap is not in the best of, in terms of high quality demand, right? There's a lot of trading to the left of it, so not a lot of high quality. We do have some a little bit lower. You can see down at the 2687, 2690 to 2666. So that's just so you know, for those of you looking at the SPY, that this area here is not a, not a great, in terms of a great demand zone there. All right, let's move to the Nasdaq. Yeah, that's a good question. Let me see. Actually, let me look into that, and I never really, it comes with the overall program, so I'd have to look into, and I'll get back to you next time on that, on the EMA or SMA. All right, so you can see here on the Nasdaq, we have these two 10-minute levels. That's after we made that new high. We had a little bit of a breakdown. This is above the overnight high. You can see it's coming in at 8882. Goes all the way up to the 8921. Two levels on top of each other. Down below, you have a small time frame. I believe it's either a 5 or a 2-minute down at the 8566, 8555. I do see this little level right before it. It kind of looks like it touched to me though, and it is overnight. That's why I didn't quite include it. But of course, it is the Nasdaq. just watch out for the overall area as we come back down into the area. So right now that's what it looks like on the Nasdaq. Let's go to the okay. So on the 240. You can see how close we are to the next area. It's, this is a supply we've had for a little while already, and right now we have missed it. So you can see it's at the 90.68, 92.31. Now the question always comes in, well, should I take an overnight? Should I wait for the new one? I know when you make your plan for the, well, you should have a plan overall in general, right? You should have an overall a plan in general where you say, should I, is it part of my plan to take overnight levels, or is it part of my plan to, and it's the same thing. You could see, it's the same thing if you're, say for instance, well, not everybody's gonna play football, but if you watch football and you're standing back there and you're looking for, the perfect, receiver with nobody around him, and you want to throw it only then, and so you're only gonna have so many throws a game because of that, right? And then other times you're going to say, well, I'm going to take more of a shot. There's a defender on them, but he looks like he's in good position. I can get it there. So, I'm going to take that shot. Then other times, well, maybe stupid. You got 3 defenders on him, and you said, well, I'm going to take the shot anyway because it looks like I can hit that exactly. So, it's you're going to get more chances because you take more areas, but it's depending on what you're looking for. So you need to make that in your plan, right? You need to say to yourself, okay, no, I don't want any overnight levels. I'm just going to stick to the outer higher time frame fresh levels. I'm going to get less trades, but I'm going to try to get more profit through with those trades, and I'm going to be good with that. And then others of you are going to say, well, I might miss the move, so I'm going to be a little bit more aggressive, and I'm going to try that 5-minute overnight and knowing that sometimes I'm going to be wrong because it is overnight, and I don't have my direction completely right. So then, that's the case too. So just make sure it's in your plan, know your risk, and whether you want to take the trade within that. All right. So you can see here too, we're very nice rally off of our 240 demand, and we've continued to rally back up. And let me just see here on I think we did the 10-minute, yeah. So then we had the little 5-minute demand, we had the 10-minute supply in between, we have the 240 supply up above, and of course you can see we've tested this. We could try to use this one again, but you could see where this 240 is coming in, as well as this lower one too as well. So those are your little bit of a lower demands. Let's go to the Qs. Yeah, we could do market internals on another day, when we could do that on another day. So you can see here on the Qs, we have a gap here down at the 203. Let me just see where we are right now. Just curious to know where we are with this move down. Okay, so yeah, we're still, okay, let me move it back. It looks funny this way. Move it back. But, if you are a longer term trader, it's more than likely. The only thing I would say is if you want to move up, if you're doing trailing stops by hand, or if you're looking to see if new supply or demand form, that's the only reason why you would look at the chart. Otherwise, especially when you're at the beginning of a trade, you definitely don't want to look at it, because that's got to be the worst. That's and once you get used to not looking at it, how many of you had your best trade because you were sleeping? How many of you had that? And you actually woke up and you're like, whoa. I mean, it can work both ways, of course, but as long as you know your risks. But because you're not watching it, you're letting it run like what it's supposed to. I think the biggest thing with it is you have to just accept, once you put in the trade, that you don't have that money anymore. If you come to accept that, then I think you're a lot freer to let it go, right? The worst thing is you put it in and you're not really looking, you didn't really decide where your stop is or anything, and then all of a sudden you're thinking, oh no, what do I do? It's like, so you want to be careful of that. But you can see up above, yeah, see that? See how many people are saying yes? So you can see here 220.97, 224.78, and then down below 203.20 to 199.60. So that's on the Qs. Let's move into RTY. RTY, we still got the 240 above. Ever since it went that limit up, you can see we have started to fall down. We still have this lower 30-minute demand below at 1139.70 to 1131.80 on the 240. And then you can see on the 240, we're just still below this overall area. So that's something still to watch out for. We have come into the lower zone, but this is the higher zone. If you want to see where we're overall bouncing off of, is still this area here. And I also put in some targets if anybody, is anybody short the Russell, just out of curiosity, or been short, and then whatever you're trying. You can see here where, this is already your, right, this would have been your, from this area, this would have been your easy money target. This is your, all right, this was the first zone that we've had so far, and then that 240 is going to come into that upper zone, right? And you can see now these are your two other ones if we want to continue any further inside of this Russell in terms of your next areas there. Okay. I mean, the only thing with the Russell is it is the weaker market. It has a tendency to go both ways, right? If the market really gets strong, you'll see the small caps really rally out. So that's another thing. Today, I believe there's two things that's affecting the markets. One is energy is still not where they want it to be, even though I feel like we should be happy, right? Gas is low, even though nobody's going anywhere, but gas is low. And then the other thing is the bonds. The bonds look like it's hanging up at all highs, which we'll get to next. But you can see here, this is what it looks like with RTY. And IWM, same thing. If some of you took it inside of IWM, it's the same area. You can see too, and those are also your just putting into context those targets too. So we've had these zones for quite a while, and this is the one market that's actually hanging still below all of these overall areas. All right, let's go to YM. So YM, you can see, has hit its daily 50. Does have this overnight area on the 30-minute that's coming in at 24.026 to 24.096. The 30-minute demand is still lower. Like I said, we all have these like 15-minute demands in here that could work as well, but the fresher area is still a lot lower in general. These more than likely, and let me just see. So you can see on the daily, next area is really like 25,307, 25,821 on the daily. Right, and let's go to the 240. Right, so the 240, so it is reacting off of a 240 supply zone. The fresher 240 demand zone is still lower at 2100, but that's quite a bit of ways as well. And then you can see really if it does start to rally, the fresher area is still much higher as well. So it is interesting where it is at the current moment in terms of whether it can. We're still, I would say, still holding like this little bit of a trend line that's moving up so far. So we probably want to look at if we start to break it or if we're just going to hold it and then bounce up and then there's more room to the upside too as well. So, you can see we are holding a little bit right there. Not that I would like to use just trend lines, but it just gives you a little bit of a guidance in terms of it's always better if you have any of these with supplier demand, so that helps you gauge whether. All right, but that's what it looks like. You want to take it or not. All right, so that's on the YM. Let's move to bonds. Now the bonds, the only thing I see with the bonds, it really hasn't changed much at all. But what I see though looks like interesting to me. So it's more or less unchanged, but it looks like to me. So you can see how many times we kind of been here, and then we're back up here again. Of course, we're high up. We do have this overnight right now, but you can see if the bonds does start to break up to the upside, we'll probably get one more test up in terms of where the 30-year is going to come to. So this area here, I would watch to see because you can see if we do move up, I do think we're going to start to move further down in the equities. But right now we're still camped out here. It's obviously been used up quite a few times already. So if we take a look at that, but then if you want to take a look at the 30-year, the 30-year. So 30-year, you can see the first little demand on the 60 minutes still holding up so far. It has this overnight demand coming down at the 178 to the 177.22, and the 240 is still higher up at the 18. So that's why I think, another push up that could mean TY take it up to a new high or so, but you can see here if it does push up. The 30-year does look like to me it's weaker than all the lower ones. So the 10-year, the 5-year, the 2-year, 30-year does look like it's a little bit lagging behind at the current moment. All right, so that's on the bonds, but like I said, it is important to watch it, even though it is unchanged, because you can see if it's going to be lower interest rates, that's going to create some sort of problem too. So, which other one I was looking at was FGBL, which is part of the German market of the bonds. So I thought what was interesting with FGBL is it was extremely strong at one time, right? And then once it started to top out on the daily, right, it was even stronger than our bond market. And then now you can see we have started to, so this looks like to me, I would imagine it's going to affect ours as well. So right now we're holding below this overall area of supply, and then the upper one you can see is 175.40 and 175.96. So it does look like if bonds take another move up, it should hit some supply and then start to come back down again. But at the current moment, it's they're all at kind of retested supply areas. So you know, and it has some close demand here at 171.58, 171.20. All right. Okay, so definitely we want to pay attention to the bond market. Let's move to so crude. So with crude, you can see we had some, like I said, anytime we had the rollover, so on any of those closer areas, you know, we just pretty much gapped up above, which is not surprising because you know, given how low we were, so it wasn't surprising we got. But since then, we've fallen back down again, so that's still creating some pressure on the overall markets. We do have these overnight areas. They're not as close right now. You know, usually I start looking at it very early, so usually it's pretty close when it's early, but then it starts to not be close. So then you can see here it's at 24.17 to 24.50. You have these two levels on top of each other. It is below the previous lows here, but you can see the overnight high. So we're having some wide ranges in these overnight. So I am wondering what's going to happen once we start the trading day. If that says anything about our volatility. And don't forget, we still have so 22.10. Now I do want to show you where this gap is. So we gapped up, right? And so this area you can see too. We have tested a few times. We've gone pretty deep into the area. So if we come back here, don't be too surprised if it does try to move a little bit lower, because you can see it's not completely fresh. And of course, we still have the lower 120s. So don't forget those two as well, right? I'm going to move a little bit lower. We have the lower 120 zones that we went through a couple of times already. So that's on crude. On let's go to nat gas. So nat gas, well, first let me go into UNG because we've bounced off of, oh, wait, wrong. Oh, this one is, hang on. I had to give like, I forget, like 17 or 20 years, but then that's going to take forever to, let me go back to 2 days, even better yet. Okay, that's even better. We don't have to wait at all. All right, let's go to nat gas. You guys ever do that? You're like, you gotta go back 20 years, and then all of a sudden you try to open up another time frame, and it's taking forever, and you're sitting there wondering like, why is it not doing it? It is important too to have, you know, many years too as well, because that's really, yeah. So you could see with UNG, you had to, that we had two levels on top of each other. We didn't do the same quite in nat gas, and that wicked out just a little bit, but you can see with UNG. So this was the last time we went over ETFs. We didn't go over the very last one, but you can see here. Anybody even attempts any parts with the UNG at all? You can see here we had to test the second level. How to move up. This is your easy money target, and then you can see right before this level, and then right before this level, your next targets with it. And if you're looking for even bigger move, that's going to be coming in, I would say, up into the daily, up towards this area here for a bigger move. In terms of has it broken out of the downtrend yet, you can see no, right? We're still, so no, it hasn't in terms of that. So that's why, if, at least if you are trying to go for a bigger move, you more than likely will want to protect yourself in terms of moving stops and things like, because it can very well come back and test the lows again. But you can always try to get back in if you want to again too as well. But you can see that's what it looks like right now. With that on that guess, we do have a little 15-minute area here, and you can see it's 1627, 1603 on net gas. Okay. Okay, and then GC, because some of you had this level already. We were a little bit late to get onto it, but let me go to the other page. So this was from also our session, but some of you already had the level on there. So if you, the risks, you could do, micros or minis, and if it's too big for you, because it is like 64.73, and with the stop, and also you do have micros, you have minis. This was the easy money target when some of you were asking. Any of you, right? Any of you so if you were just doing for a day trade, you can see it's fine. We did go. Now the warning here, now you can see this one is your next one, but this one I would say because of it's going to depend a little bit more on equity markets at the current moment, because equities, if we find a little weakness, this can very, very well rally back up again. So if any of you are looking for a further move, because these you can see now the next targets on them. This one will depend on the equity markets at the current moment. Then we have the lower demand, 1669, 1660. Okay, that's fine. Because I completely understand, because you can see with the uncertainty going on in the overall world, and you never know, because it would very easily take gold right back up again. So to close it, just because you want to lock in your profits and then find trades the next day, that's fine too. But that's what it looks like right now. And so nice job on that. Now you can see too, we do have this little bit of an area. So one thing I do want to caution, like we're already coming off of that 16-minute zone. So this is kind of inside of that. So it's not as good as quality. This area at the 1726 to 1740, I would do a little bit more of a kind of wait, because we do have a 15-minute on top of it. So I would kind of like to see where it's going to try to stop at. So this area is a slightly higher, this 1739.70 to 1750. So this general overall area looks decent on between the two of them, but because it is a larger area, you can wait to see, since it is a lower quality. First time in, new fresh zone is, you can take it right off the way it is. Then it starts getting a little bit more as it starts to be inside of that overall area, right? So you have to watch out for new demands and things like that. All right, so good. Let's move over to the dollar. So you do want to focus on any sort of earnings this week, and on top of the oil market. Those look like two, plus the bonds. Those look like the major things this week, since we don't have a whole lot of news going on. So dollar, you can see, right? Dollar is kind of back to where it kind of was before, where the volatility just completely is gone, and you can see it's happened again. And it looks like just like we saw with the VIX at the beginning, we lost volatility there. It's kind of telling me the same thing with the dollar at the current moment. So we're inside of this overall triangle. Like I said, the quality of the currencies are not going to be as great now because we're not completely out of supply and demand imbalance. So we're not going to have great quality here. We're going to have some levels, but like I said, we're not out of direction or the overall volatility move. So, but we can take a look at some, and then we'll just knowing that this is the case. All right, so we could see down below we have the 240 down below still at the 62.36. This is the Aussie dollar on the future. So I'm going to do futures today, and then as the week goes on, we can switch back and forth between some spot. Today I'm going to focus a little bit more on the futures. So you can see this 62.36, 61.97. Up above current price is 65.48, 65.89. Remember that it is coming off of an overall 60-minute zone, so these 50-minute levels are inside of that 60-minute. So you can see these three on top of each other, starting at the 64.19 up to 64.43. It is coming off of a overall 60-minute supply that price has been moving down to. Okay, let's take a look at BP, and you can see here on the 240 tested way up into this upper zone, now has hit into the lower zone, and so one thing you can do is if it starts to break, if there's new supply that forms, you could definitely watch out for. You can see where the outer zones are. They are quite a bit, in terms of freshness wise, still quite a bit further out. So that's something to be aware of. But on the smaller time frame, you do have a little 15-minute area at 126.79, 127.25. What I would say with FX in general, with the smaller time frame, sometimes when you get like nice momentum moving, they can be pretty decent. Usually when you're in the middle of the range and news is coming out, a lot of times these small time frames does have a hard time overall working. But with the low volatility, not too much news, they can be still pretty decent. Let's go to, CD. Okay, so you can see CD2 right now. So any of you captured this? We had 15-minute CD zones. I don't know if any of you were able to capture CD, right? So you can see we had these couple of zones on top of each other after a pretty good fall in price off of the 60-minute level. Now you can see we have rallied back up, and because the energy market is weak, CD has remained weak and able to hold below it, right? Yeah, so you gotta be careful, and because remember, especially a couple of these markets, you got BP, SF, CD. AD is not too bad. AD is more in line with EC, maybe, but a lot of these markets, they can be thin at times, right? If you take a look at the time period here, right, very thin at times. And so if there are a couple levels on top of each other, it's not going to be easy to get it into just a small little area. So, like I said, if you're not comfortable with the risk, go down. They have micros in this, they have micros. You can just continue to go down in size until you're comfortable with it, instead of trying to narrow it down as much as you can. Because some of these you are going to get, like I said, this time period is very, right, this is Asia, This is end of the New York session. This is also yeah, this is after the close. So it is very easy for prices to spike because of that, just purely for that reason. So just be aware of that. But I did put in some targets. If you are short it, you can see this is the easy money target, but down below now you have these two other targets a little bit further down too as well for those of you that are. Well, think of it this way, right? If these markets don't move with each other, right? If they don't, you're going to have arbitrage. So no matter you're doing micros or minis or the regular ones, if you have a big difference in price, it's going to get matched up very quickly. So yeah, you go down to micros is not going to be an issue because if you're looking for if you're trying to scalp you know six ticks or something like that, that's going to be a problem. But if you're looking for a general move overall in general, and you want the larger area with the smaller risks, something that you can handle, it won't be a problem. Yeah. But if you're trying to do like major scalping, then you probably want to stay away from that. All right, and then you can see what it looks like in general too. You can start to see if it starts to break down, that's creating more, and then you could start to watch out for more supply zones. But right now, you can see we're coming off of the daily and hitting this trend line. And let's go to EC. So EC, so what we had talked about was it wasn't great zones, but there were overnight zones down below. So I don't blame you if you didn't get in them. They were overnight. You can see these two levels on top of each other. I don't know if somebody did try anyway, but it's still having some struggles here with supply. But I put in some areas too, just in case you did, in the near-term ones, right, on EC. And the 240, and then the 240 area, that's where you're going to be your next overall target. Some of you like to. And then the 60-minute is still a little bit higher. You have these two zones up at the 60-minute. That's still quite a bit away. And I just want to give you a bigger picture of should it move a little bit lower. You can see on the monthly where we are. So I just want to give you a bigger picture look at things just so you know. We've been bouncing off of this monthly here, right? You can see it right. Oh, it's not going to move. So we've been bouncing off of it. We've had a couple of bounces off of it so far, and we're still holding above it. The lower one, could it get there? It's going to be a little bit below parity, but that looks like a good place to buy again if it does come down through that area. So that's something far out, but never know the way things are going. So you never know. Just keep that in mind. And the last one is going to be JY. Okay, with JY, what we're going to look at is so 240 has a retested zone that's just above current price. You can see volatility has dropped too with JY, as with the dollar, with the VIX. It's all going to drop together, the volatility. So you can see here 94.10, 94.70, the lower area 90, 91, 90.57, but we do have a 30-minute. No, that's not 30. We do have a little 30-minute here, 92.53, 92.42 on JY. Okay. Yeah. All right. So let's so we're good for that. I'm going to put back up the email for those of you that missed it. So if you liked it today, hit the subscribe button. And again, if you want to join the priority list, please email me at my Gmail, and we will definitely put you on the priority list. And or watch my social media for the new venture, of course. And hopefully everybody will have a great trading week. Actually, see you tomorrow. So we'll hopefully get some volatility back in, and we'll see. Never know though. We'll see tomorrow. All right. Have a great day, everyone. Oh, I didn't. Let me just put up hang on. For those of you that need the email.